can see Deputy Director, Oversight, Compliance Deputy Director in PSMD. Managing Director of NIPS, I can't see him too. Okay. Our director is coming in. So once again, let me acknowledge Director of Payments, our captain in the fintech space, Deputy Director, Managing Director of NIPS, executives all seated. So what I thought I should do is I will run through quickly some of the areas which I think we can collaborate more to grow the system. I have an unusual advantage of having been on fintech and banking. So some of the things which I might talk about might not be banking, might not be fintech. I would believe that there will be more objective citizens' view of how we can grow the ecosystem and the market. So first quickly, I will define. If we are going to grow the market, I will define it as everything we need to do to expand and deepen, excluded, with the depth of service that we also need to be put on that financial rail. Why I say this particularly is that I note that we are saying e-business and not e-payment. The founders of your organization who said e-business must be thinking much more widely than payments. And the whole essence of an electronic rail is how you both extend the rail and you also get as many trains to ride on it as much as possible. That is when we are sweating the investment in the financial rail. And the expansion of market has to be a balance between market and society. It's not just about how much money we want to make. It's about whether we are solving society's problem. So in a country where we have, in a country where we have, this is the slide I will use. Oh, it's not working. In a country where we have 51%. Okay, God. All right. I'll just use one. Okay. Maybe this is the only slide I will just keep. I want us to look at this slide because I think it illustrates the challenge that we need to talk to. One is, if you look at the formerly served in terms of financial inclusion, we are only growing based on 2020 EFINA data. It might have changed by the time we see the result the next 1 week or so. We've been growing maybe 2%, 2-3% every 2 years. If we project that kind of rate of growth in terms of formerly served is important because if we are going to do other services like credit, it's only on the basis of those who have former financial account. That's where we should focus. So that's illustrating the kind of challenge that we have. Formerly served, we're only growing 2% or 2% every 3 years, and we are just about 41%. If you look at another important thing, credit, because the social impact of payment is actually when people are able to borrow their future income today and live themselves out of poverty. We have a geographic problem between payment growth and credit. In the last 10 years, based on 2010 to 2020, payments grew by from 22% to 45%. But credit remained flat at about 3%. If we continue that way, the larger social impact of what we are doing may be suboptimized. So these are, in my view, market expansion opportunities that we need to talk to quickly. I thought we could look back. We can look back at, so those are two key matters, the financial inclusion issue, the geographic challenge that we have. And I thought we could look backwards to see the opportunities of collaboration that we have missed so that we can make a case for stronger collaboration today. The first one I would like to talk about is, let me go there quickly, maybe useful. Is this one. I'll keep it simple. The whole conversation is getting louder and louder about digital public infrastructure in Nigeria. The coordination that we need to have between the public digital identity infrastructure and payments. I'm very glad that my brother and very active patriot, brother Premier, mentioned India many times. But the fundamental reason why India has accelerated financial inclusion is because of the tightly integrated identity and payment system that lies on top of themselves, working together in real time as a stack, as a digital public infrastructure stack. And the result of that is anytime an Indian registers for a digital identity, he automatically has a financial account. Very simple. Get your UID, which they call Aadhaar. Immediately you have a financial account because the systems are tightly integrated. The opportunity costs, what we have in Nigeria, somebody said that we have all the ingredients of financial inclusion, but they are standing in silos or they are not tightly coupled. It's probably one of the things that we need to fix in terms of collaboration. Because if we don't, everything that we do in financial inclusion will only be giving us incremental 2-3% until we fix that part of our ecosystem collaboration. In terms of the opportunity cost of this is that we now know that digital identity in Nigeria has grown between last 5 years from probably about just 50 million NIN, I'm talking of NIN, to probably 103 million today. Let's discount about 3 million for children and assume that 100 million of the NIN that we have today are adults. If we add the Indian stack model, where every identity translates automatically to a financial account, it means that by today, we will have had 100 million former financial accounts. That is the opportunity that has been missed. And that is the case, perhaps, for a stronger collaboration at the digital public infrastructure level between NIMC and NIPS and all our players there, whatever they need to do to achieve a simple situation where register for NIN and you get a financial account immediately. Then we don't need too many fintech people to be running around trying to do financial inclusion. It will be automatically processed in the process of identity registration. That is why India has scaled its financial inclusion from virtually like 30-40% to 80% today. And if India can do it despite its geographic complexity, demographic complexity bigger than us, 7 times Nigerian size, we can also do it in Nigeria if we look at the DPI issue. Let me commend our Director of Payments, our regulator, for that very bold initiative on Friday to get all accounts. You must have an identity. There's no reason for anybody today with all 3 million NIN not to have an identity. It will sanitize the system, it will curtail fraud. But there's a second benefit, which is even bigger when this is done by God's grace, by Q1, as the circular said. We will be able to know, by the time this exercise is completed, the number of Nigerians who have NIN who do not have a financial account. Because by the time we complete the exercise, 103 million Nigerians, we estimate that maybe with NIPS, BVN, 60 million. We're having a chat with Roque. Maybe an additional wallet people, maybe an extra 5 million or thereabout. And I was trying to do some rough calculation with the FINA data myself. If we use the FINA data, that said that the fintechs have only expanded the financial rail by an additional 13%, 45 plus 6. That's the financial inclusion data. Even if fintechs have done 20%, based on what we have done in the last 2 years, then 20% on top of the 60 million BVN, we assume maybe best we'll get an additional 12 million people. If the data is right, there will be a gap of 103 million minus 70 million Nigerians who have NIN who do not have a formal financial account. They represent a low-hanging fruit for us to accelerate massively financial inclusion in 1 year. But for us to do that, we need to have a collaboration of NIPS, banks, and fintechs led by a regulator, because these are low-hanging fruits. We know who they are, we know their phone number, we know their biometric, we know where they are. We can target them and bring 20 million people into the financial rail if we work together after this exercise is completed in the next 1 year. And that, for me, is one example of the kind of collaboration, high leverage collaboration, high level impact collaboration we need to have in the ecosystem. The other one, of course, in terms of I'm rounding up in terms of the geography between payments and credit, the collaborations that we need to have in terms of credit bureaus, fintechs, and banks. As of today, fintechs are not submitting their data to the credit bureau. Therefore, we do not know this issue of people jumping around. We have no credit history of some of the new customers who are coming into lending. I think in the future, a discussion like this should also have a credit bureau. How can we cooperate? And of course, with the enforcement by the regulator. State lenders, everybody must submit their data to the credit bureau so that there's a common view of who is a good borrower in the system. And it will lead to a situation where borrowing becomes cheaper because the good borrower can get a better credit. The second thing, of course, is that if NIN is 103 million and we want to extend credit to many more people, the credit bureau themselves will need to start using identity that is beyond BVN. So that even if you don't have a BVN and you have an NIN, then we can begin to track what you do in terms of financial behavior. So this needs a collaboration between fintechs, the bureaus, and everybody, so that we can expand the coverage of the credit bureau, which will enhance credit information and credit coverage in Nigeria. The last thing I would like to talk about very briefly in terms of area for collaboration is for banks. Banks, we will probably not lend to 90% of our customers, especially for MSMEs who have been denied access to credit. I've been on that side before. We can partner with fintech and collaborate with fintechs who have smart lending algorithms to take those customers that you never lend to and lend to them, so that we don't hold that base of our customers hostage. I know if I wear my banking card, I will not be comfortable, but there's no point. Best, we still not lend to them. The chief risk officer will not allow. But if there are fintechs who have smart algorithms, who are willing to use their capital for this group, then we should open up the space. I think this is one of the best cases for open banking in terms of collaboration, so that we can reduce the geography between payments and credit and get many people lifted out of poverty. Let me keep it short here so that we can. But to do this, we need a culture of collaboration. I think the biggest problem that we have in terms of culture is the zero-sum game attitude that many of us have. If you win, I lose. How can we have a win-win situation in which we grow the cake and I get the share that I will get out of the cake will still be bigger than if I was working on my own? How do we get that kind of a culture? It needs long-term thinking, win-win attitude in terms of collaboration, and I think if we do that, we will be able to have a financial system that has a far bigger social impact than we have done with solid market expansion, and that is commercially profitable to all players. Thank you very much.